So markets started 2024 with a bust. Traders closed out 2023 on a high note. Investors were greeted with one of the worst opening days for global stocks and bonds this century, while the Nasdaq logged its worst first day of the year since 2016 after a 40% rally last year. Now, according to Bespoke, a recession can't be ruled out, and 2023 may have been too good to be true. Now, Seana, when you kind of think about the good and the bad of the last year, or really where we stand, kind of the way Bespoke framed it is, who knows what happens in 2024? I always appreciate these outlooks, for you don't really know. But on the negative, let's start with the negative. And I think something that they called out in their note, this was out late last week, is that sentiment had gotten so high at the end of last year. And, there were kind of jokes, you do tax loss selling last year. You could do your tax loss selling at the beginning of the year, if you want to square out your books that way. But ultimately, I think sentiment around the market, sentiment around where we're headed with this tech trade, we're going to get into that later in the show. And really with rates, I think, is the big challenge for investors, because all of the hype last year, where could rates go? Well, the Fed told us most likely where they're headed. And now that really is like, okay, so how do you trade that since you already, it's already been quote unquote, maybe, depending on who you talk to, priced in to an extent.
Well, yeah, exactly. I think that's exactly it there, Myles. And you talk about some of the pain that we saw yesterday within some of those mega cap tech names. Now, the question is there more pain ahead? We're going to get into that. Bank of America was out with an interesting note on that yesterday from Savita Subramanian over there. But when it comes to some of the pain that we could see more broadly speaking in the market, there is this sort of a line of thinking out there right now that maybe we have gone too far, a little bit too fast, especially taking into account the rally that we saw at the end of the fourth quarter. Maybe investors are a bit too optimistic given the data that we're still giving out on the econ side of things, that maybe the rate cuts that they are hoping for from the Fed coming as early as March is a bit too optimistic. So taking all of that into consideration, we are seeing a bit of selling once again here, at least with taking a look at some of the futures performance here this morning ahead of the open. We could see a continuation of the selling that we saw yesterday. The question, though, is to what degree is that selling going to look like and where that pain is going to come from, whether or not that's going to be mostly coming from those leaders of last year, those mega cap tech names.
Yeah, and I think, the last point on this is that you have this macro trade, like a very obvious macro trade about what is the Fed going to do. And you can go through and Nick Colas over at DataTrek this morning had a great note talking about how the 10-year has really been the driver of the market over the last couple of years. But the big trade or the big conversation, particularly from stock strategists, Savita, some of his Brian Belsky, is the way that equal weighted S&P is more attractive. Or you look at everything X the Magnificent Seven, the S&P 493, valuations there are pretty much in line with historical averages, trading about 15 times forward earnings. On average, the S&P trades about 14.8. So things look a little bit better on that basis. And I think, Bespoke flagging that as a potential positive for investors in the year ahead. So it's kind of this dichotomy where you have a very, one conversation, the macro conversation, I think it's a little bit less constructive for investors. But if you want to do, which all strategists want to do, the stock picking game, the theme picking game, that has a lot more positives, I think, for folks looking, quote unquote, under the hood. I don't know if the S&P 493 is under the hood, really, but we'll call it that for
it was in 2023.
This exercise. Yeah, that's right. Yeah. Anything that's not NVIDIA, I guess, is a small cap.
Anything that's not, yeah, exactly. I'm not one of those seven favored there from investors in 2023. At least was under the hood to some extent last year. We'll see whether or not that continues to be the case this year.